We'll start the today's market talk. We have seen that we pay a very high price in stock market for a cheery consensus. Everyone if is enthused about a stock, whether it is IRCTC, IEX, Deepak Nitrite earlier, we have seen that as investors we have paid a very high price because everybody was trading on the same side. And when the stock falls, because expectations are very high but which are never achieved, then the price destruction is pretty big. The market setup, as I see it, Fed officials have indicated that a pause is justified, while emphasizing that skipping a rate increase in June doesn't mean that they can't deliver a hike at a later date. What it means is that as what we have seen with other banks like Bank of Canada, Australia, which had hiked rates now after a pause, while RBI has skipped. But with strong growth, it is most likely that RBI is not likely to cut interest rates very soon. So this Fed meet of 13-14 June will be critical, and the whole world will be watching whether the Fed will skip, pause, hike. Every day there are different data points, and every day the consensus view on this issue changes. Whether there is going to be a 25 basis point hike now or in July, or there is going to be a pause, or there will be a pivot, nobody knows very clearly. With respect to Indian equity markets, in the months of April and May this year, we have seen FPIs have pumped in 32,000 crores, and which has taken the market up from depth of 16,800 to 18,600 now. The good 1,800 points move on Nifty, and the mid caps and small caps have also moved, and the indexes are nearing their all-time highs. Now, the big themes which we are looking out for long term, as I had mentioned, one was that India is going to be a global manufacturing hub and China plus one is going to be a big opportunity. Now, here, as we have also seen with respect to our PMI data, which shows that Indian economy is in fine shape. China plus one theme is going to be very strong for certain sectors like consumer durables, white goods, defense, renewables, chemicals, and pharma. And certain stocks in these fields are Amber, which is in ACs, Sirma SGS in PCBs, Borosil Renewables, Ablon Tech, Ami Organics, Dixon in terms of mobiles, Keynes, PG Electroplast, Tata Power, and many more. So these are the stocks which are provide a long-term opportunity. The hotel and hospitality industry is also in a structural uptrend. We have seen strong demand, more rooms being created, and higher realizations with better margins for hotels. The stocks in this field are Indian Hotels, EIH, Lemon Tree Hotels, Royal Orchid, all are doing well. In addition, the aviation sector and VIP industries also is going to be a beneficiary of this uptrend. With respect to IT, we have seen Info Edge Management has pointed out that they are seeing a IT hiring slowdown, which is likely to continue for a couple of quarters. But we have seen as with Nasdaq, AI is a big opportunity where six stocks have powered move, the complete move in Nasdaq. Info Edge also has been brought down because they have done a lot of write-off in investments and they are trading at a P FI25 expected P of 61 where it implies that the valuations are very high. Hence, it has corrected. The valuations of defense stocks are also pretty good and high, and they are pricing in a lot of expectations. Hence, the investors need to be patient and selective while getting into them at some corrections. We have seen over the last 1 or 2 weeks that defense shipbuilders have done really well. They have strong growth in revenues, improvement in margins due to lower commodity prices, and strong order books which are at all-time high. Electrification of vehicles is another mega trend. We have seen stocks in this field like Sona BLW, Mahindra CI do well. The fluorine-based pharmaceutical and agrochemical products is again going to be a big mega trend. We have seen it with fluorochemical stocks. We'll cover these stocks now. If you see these graphs, this is for three fluorine companies, Navin Fluorine, SRF and Gujarat Fluorochemicals. We can see with respect to their sales or revenues have gone up gradually over the period of last 5 years, that is from 2019 to 23, and it's a gradual rise, but it's a trend which is clearly visible. And as we also see, their operating margins have improved over the last 5 years. So if you see, because of this, their profits have grown up, though the stock prices have also gone up, but it provides a great opportunity for future. Now, covering the basic theme of today's lecture is about the option Greek theta, intrinsic value and time value. Option premium comprises of intrinsic value and time value both. Intrinsic value is by virtue of moneyness of the option, and time value is attributed to the time left to expiry for the option. Intrinsic value we have seen over the last two sessions in terms of options, where we have discussed the option Greeks delta and gamma. The intrinsic value is also seen whether the option is in the money, at the money or out of the money. We know that only an in the money option has intrinsic value because only an in the money option would have any value if it were to expire right away, and this value would be equal to the difference between spot and strike price. Hence, the intrinsic value of at the money option and out of the money option is 0. Hence, you can calculate the intrinsic value by a simple formula: absolute of strike price minus spot price for in the money options and 0 for at the money and out of the money options. Hence, the entire premium of out of the money options and at the money option is by virtue of their time left to expire. We'll see this in greater details after this. So what is this time value oblique theta? Time value is nothing but hope, and out of the money option has no intrinsic value. Hence, if there is time left, there is still a hope that it can have intrinsic value someday before it expires. That implies that it may expire over a period of time in the money. Then only it will have intrinsic value, and the time it that hence its premium is only reflecting the time value. Longer the time to expiry, stronger is this hope, and so higher is the time value. At the money options have higher hope and higher time value. The deeper out of the money option is, lower is its hope oblique time value. Therefore, theta measures the rate of erosion of hope of an option. We can see how the theta decay takes place with respect to option premiums and with respect to the time to expiry. Hence, if you see, as the time to expiry reduces, the option premium also falls drastically. It is not a linear fall. So the theta decay is faster closer to the expiry, as we can see from this graph. So theta is the decay per day of time value in options. How much the value of the option is decaying every day or reducing every day is theta. Now let's take an example of intrinsic value and time value of option Nifty option of uh, this week, on Friday I've taken the values. So the spot was at 18,563. So if I have taken the values for premium for options expiring on 15 June and 29 June. For strike prices 18,000 C, 18,600 C and 19,000 C. So if you see here, the premium here is 590 and for premium for 29 June expiry is 649.5. So what is it comprises of? The intrinsic value, that is the moneyness of the option, is 563 and the balance 27 out of 590 is the time value for option expiring on 15 June. Now for option expiring on 29 June, the intrinsic value remains the same, that is 563 spot minus strike price, but the time value is higher, that is 86.5. For 18,600 C, you see the premium is 77, but there is no intrinsic value because it is out of the money. Hence, the complete value is the time value. Similarly, for 29 June also, the complete value is the time value, that is 180. For 19,000 C, the premium reduces, it is 4.25 and 33.5 for option expiring on 29 June because it is deep out of the money. Here again, there is no intrinsic value and the time value here is 4.25 and time value here is 33.5. So what we see here, what we can conclude from here is that only in the money options have intrinsic value. At the money and out of the money option have only hope oblique time value, as we can see from these two examples. Longer the time to expiry, higher is the hope oblique time value, as we can see between 15 June expiry and 29 June expiry for both 18600 C and 19000 C. Deeper out of the money and option is lower the hope oblique time value, as we can see from here. The deeper out of the money option, that is 90,000 C, has lower time value as compared to just out of the money option, that is 18,600 C, which has a time value of 77. So how does theta impact option traders? This is where it impacts us. Firstly, for option buyers, they want the option premium to increase after he buys it. Then only he will make money. But what happens is, with passage of time, theta erodes the option premium. So when you are holding an option, it is almost akin to holding melting ice. It just goes away very quickly, the premium. So if you have bought a call option, you would need the underlying to pick up, that is the underlying price to go up after you have bought it and to do it quickly. Similarly, if you have bought a put option, you would need the underlying to correct and correct quickly. So a gain in intrinsic value would be negated otherwise by a loss in time value. We would have seen when we are option buyers that even if the underlying price, that is spot price, has gone up, the premium keeps going down. That is because of loss of time value, which reduces very quickly as we go closer to the expiry. For option sellers, on the other hand, hope is for the option premium to fall. They want it to fall very quickly. So time is the option seller's friend. Greater the time, greater the chances for the option premium to fall. And they want it to expire on expiry date to go to zero, so that they can pocket the complete premium. So as time passes, even if the underlying does not move much, the option premium still decays and option seller still pockets a profit, all thanks to the time. So time is the biggest friend of option seller. So what are the things to remember with respect to theta for option buyers and sellers? Option sellers are always compensated for the time risk because it is their friend. The time is their friend. Greater the time decay, the better it is for them. All else equal, options lose money on a daily basis owing to theta. We have seen with respect to the graph. Time moves in a single direction, hence theta is a positive number. It can only go up to 0. So time value becomes 0 uh, at the money on expiry date. Theta is a friendly Greek to option sellers. It only favors the option sellers, it doesn't favor the option buyers. When you short naked options at the start of the series, you can pocket a large time value, but the fall in premium owing to time is low. As we have seen, the decay in time value is less at the start of the series, but as we go nearer to the expiry, the time value decays very quickly. So initially you may find that your premiums are not going down very fast, but since the premiums are high at the start of the series because the time value is higher, so you will pocket a large premium, but the decay is not that fast. Simultaneously, if you short a option close to expiry, the premium though has gone low thanks to time value, but the fall in premium is rapid because of time decay. So we have covered the theta part today and certain mega trends which we must keep in mind in case we are investors for a period of 3 to 5 years. Thank you.